want to do something different today because why not, right? Because that's me. So I wanted to actually talk about some of the things you saw. Because TikTok is built for clicks, not for good sound judgment or advice. And it doesn't matter which business we choose in here, whether it's plumbing or fixing roofs or whatever, therapy, the advice is probably not 100% accurate for everything. So let's go ahead and go next slide. So I want to go through a few. So why TikTok's advice is dangerous? Well, there's a lot of penalties and fees if you screw up with the IRS. So if it's with your health or with everything else, there's consequences on there too. So willful penalties are pretty bad. So let's not listen to the influencers, because they are influencers and not experts. Go ahead, next one. So, myth number one. Write off your G-Wagon. It's a business vehicle. Right? Everyone knows a G-Wagon. I had to look it up, so. But it's okay to write off a vehicle, right? What type of vehicle makes a difference? So are you actually using it for a business purpose? Can Jared write off or Jason write off a G-Wagon for their business?
Yeah.
Probably not going to happen. It doesn't really fit there. Unless you have a toolbox in the back, you can probably make some adjustments, but you still have to be able to justify it. If you have an expensive vehicle, there's a luxury vehicle limit on there as well. So if it's seen as luxury by the IRS, you're going to get screwed. So if you have a luxury vehicle you want to use for your business, I would recommend just taking the mileage deduction, tracking mileage. 70 cents is still better than nothing. Next bit. Pay your kids and deduct it. This is true, mostly. But you can't pay them $50,000, and you actually have to pay them for legitimate work. So you can't pay your 3-year-old because they're your marketing expert. They're doing all your social media, and you can't pay them $30,000. So it has to be a reasonable salary for the position in which they hold or the duties they perform. So you can do it, and it is tax-free up to certain limits. And so it depends on how your entity is structured on there as well. We'll take questions at the end, but if you have one, go ahead.
Can you pay them into a 529?
You're paying them, and then it's contributing to the 529.
Yeah.
So yes.
Okay.
Yes. Yes. Next slide. Start an LLC to lower your taxes. Well, yeah, if you have a legitimate business, so you just can't start an LLC and write everything off just because you can. But if you get out there, there's a bunch of experts on there to tell you everything that you can do. But it has to be a legitimate business purpose. And there's also something called, is it a business or is it a hobby? If the IRS determines your business is actually a hobby, then guess what? You have to claim all the income from that hobby, and you cannot put any expenses towards it. So do not mess this one up, because it will permanently set you back. It's even better. Let's go to the next one. Everything is a write-off if you own a business. Same thing, right? So you can write off anything that is ordinary and necessary in the course of your line of business. What does that mean? It varies by person. So just got to be smart on it. And that's where I let my clients say, ask me the question before you do it. Don't tell me after you've already done it so we can fix it. Or there's certain things we can do to make sure that it is deductible. Buy a rental property and deduct your losses against your W-2 income. What do we think?
Yeah, totally legal.
Passive and non-passive, right? So if you're Kim, maybe it makes sense, because Kim is actually a real estate professional. You can't take non-passive losses versus passive income, right? It just doesn't work. All right, next one. Augusta rule. Rent your home to your business tax-free. True. You can rent your home for a reasonable amount tax-free based off the Augusta rule. You can rent your home out for, this is named after Augusta National, the golf tournament, the Masters. You can actually rent your home out for 14 days tax-free. So you can use your business can rent the space in there for a board meeting or things like that. But it has to be consistent with what you would pay for like this room. If this room costs us $660 a month, you can't charge yourself $20,000 to rent your kitchen for a board meeting, or your dining room, maybe better.
But
Maybe Great Craze
could
has
you do
one,
660 though in that scenario?
What was that?
You could do 660 though, right? Because you could justify that.
As long as you can justify the expense, yes, correct. So get comps, find out what other event places are, and then you can actually do that.
I will be doing that. Thank you.
There you go.
That was super helpful.
Write off your dog. This is probably my favorite one. So, is your dog a legitimate business expense?
It could be.
Could be. Do you have a therapy dog? So then you can deduct the expense. Is your dog a medical dog, a service dog? Then yes, on your personal side, you can write it off on your taxes. So again, not always the case, but sometimes it is. So like Jacob needs a service dog. He has his little Chihuahua service dog to help him calm him down.
Yeah.
So it just kind of reminds him of home, you know? All right, next one. Write off all your home expenses if you work out of your home. So you can do the home office deduction, but that is a percentage of your expenses compared to the square footage of your office to the square footage of your house. The square footage of your office, which is your dedicated home office space, which means it's not also the laundry room or the spare bedroom, but it's used primarily for the office. So if you get audited, the IRS auditor, wants to come in and see that it's set up as an office. So get rid of that, it'll be fine. But yes, you can write off legitimate expenses, and it can be electricity, utilities, mortgage, interest, that's not deducted on Schedule A. It can be, you can even depreciate the house up to there. But why would we not want to use depreciation? Anyone? Depreciation recapture, right? So if you're going to own a rental property or anything like that for a short period of time, you want to limit kind of how much depreciation you use, because what that does is you have to pay it back, right? When you sell the house, so it lowers your cost basis on the house. So if you bought your house for $200,000 and you depreciated $100,000, well, now your cost basis is $100,000. So when you go to sell it again, you got to pay capital gains based off there too. So if it's a property you're going to keep long term, probably a good strategy. If it's something that you're going to keep for a couple of years, probably not a great thing to do. So let's be smart. Next one. That's it. So there was a trick in my slideshow, and anyone for a free lunch, what was it?
A trick?
There's something that was wrong in my slideshow.
You had myth on every single one of them, and some of them were facts.
Well, no. How many myths did I have?
You said 3.
I said 7. But how many myths were there? 8. Robert, you get free lunch. Congratulations. So why do we listen to influencers? Why should we not listen to influencers, right? I think this pretty much says it all. When you make an error, sometimes an error is seen as just a failure or an accuracy-related penalty, which isn't too bad on there too. If it's deemed that you are evading paying taxes, that is criminal. And up to 5 years imprisonment, up to $250,000 fine. So, and probably destroys you a little bit. You could be like with Wesley Snipes. Who else on there? Or favorite celebrities that?
Chrisley's.
About Al Capone.
Al Capone. Right, Al Capone didn't get caught on anything else other than tax evasion, right? All of his criminal enterprises on there too. I think that's the last slide. Any questions? I got 30 seconds.
Back to that last slide. What is
Frivolous?
Yes.
Means that you're just doing stuff you just put a return there and you didn't even have any accurate numbers to put it together at all.
So incompetency.
So when it comes to cash donations versus in-kind donations, what do you
In-kind donations, no. Cash donations, yes. So if you donate time, you can't. So if you do like a job for in-kind, you can write off the materials. Well, actually, no, you can't write off the materials because you expense the materials. So you can either expense the materials or write off the materials, it's the same thing, right? And labor, you can't. I know.
More questions, schedule one with the.
Awesome, thank you.
Hold on.